Are you in a hurry? Or is that okay? Is that just out there? Come on, own up. Are you in a hurry?
Oh, yeah.
All right. Well, it took me a while to put a name on it. But I figured out pretty quickly that the fastest way, call it a fast track method, and maybe you've already figured out I'm teaching classes on both marketing and construction and all that kind of stuff. The fastest way I know to put some serious money on the table for you is distressed housing. You can call it foreclosures, call it, the foreclosure phenomenon is a modern thing, but there's, since the beginning of time, there have been distressed housing on the market. And what I figured out is you find a distressed piece of housing, you've got a few competitors and maybe they're contractors. By and large, people who fancy themselves as investors are not going to go anywhere close to a place that needs a lot of work. No, they aren't. Needs too much work, or maybe they're being smart enough to know I don't know enough about it, or the one that I tried, I got cleaned out by my contractors, I'll never do it again. But quite frankly, working with distressed housing is, how best to explain it. First of all, you're buying it at a discount. You know enough about the trades that you have a very cost-effective, streamlined system for fixing it. And then you call the bank, and the bank calls appraiser friend, and they go out there. And as much as you're hoping to do is to bring that property back to the value of its neighbors. Don't kid yourself that you're going to build a mini Taj Mahal and they will come. They aren't going to come. If the houses on that block are selling for $140,000, you better bloody well be able to put your house on the market finished, first class condition for $140,000, and then be happy to take $130,000 for a quick sale. Get your money and go do the next one. My position is that by and large, any 3-4 bedroom single family home anywhere can be fully rehabbed in 21 days. You go home and you tell your brother-in-law, the general contractor, or any contractor, that I just met a guy who says he can rehab a house in 21 days. He's going to laugh you out of the room. So first thing, if you decide to do this, don't tell anybody your goal is 21 days. I mean, just for starters. Just schedule the work. And I can teach you how to schedule that where, quite frankly, 21 days is. So this business of moderate risk, just to wrap this up. Central to that concept is that, first of all, obviously, to make the decision to go out and buy the house, is you're putting some money on it. But the idea, and so arguably, yeah, you just risked $5,000 to $1,000. And your success is contingent on your ability to kind of bring it together. So hopefully, you've done some preparation. You're not saying, well, my brother-in-law is flipping houses, I guess I can do it. Well, he probably doesn't know anything. Who knows whether he's making any money or not. Probably hasn't paid any taxes in years anyway. But the concept of moderate risk, and it can be learned. I got friends who say, I'm risk averse. I've always been risk averse. Then you simply take a smaller project. Because the idea of moderate risk is that it's a controlled risk. You're probably not putting up more money than you can afford to lose. In today's market, you can make pretty much every mistake in the book. And maybe you're not going to just do fabulously well, but you're not. Will you sue me if you don't make money on your first deal? But I can't imagine you're not covering yourself and making some money on your first deal, even if you do everything wrong. Moderate risk is manageable and it's quantifiable. Understanding going in what the range of possibilities. Why? Well, so you have a plan B. Well, if this happens, what do I do next? Okay. Plan Bs don't mean anything if you haven't kind of studied the possibilities. Right? Is that fair? So it can be learned. In our workshops, arguably, we help with that. We teach we give you that basic skill set. And then, like me, you can spend the rest of your life really kind of polishing it and really learning it all. I can't teach you. Yeah, you can't, there's no book out there that teaches it. To some extent, every situation is different. But out of that, you want to understand the habits and the behaviors of successful entrepreneurs applied to this micro market. And the reason, as an entrepreneur, this would make sense is I don't know another market where you can take $10,000 or $15,000 and in less than a year's time grow it into a $750,000 portfolio and $100,000 in the bank. And I can show you how to do it. All the while, matter of moderate risk. That's a promise. And there's no smoke and mirrors, no fancy, oh, lease with option, whoop-de-doo, smoke and mirrors. Not a chance, not for me. Not for me. We just talk about honest work, honest things. And what you end up with is a solid, fast-track approach. I really started beating the drum on this with about 6 months into teaching this stuff. I was having my people come back and say, I haven't seen you for a while. Where have you been? Oh, we've been working. I'm remembering 2 guys in particular. They're insurance adjusters. They worked for the same company and had known each other for a long time. They went on, they tag teamed. And in less than a year's time, they put together 23 doors. And they were just going in. And I said, how did you do that? We just followed the flow chart you gave us, Phil. Really? Shucks, I just thought that was an interesting model. So no, it works. It works. So if you set up your scenario and follow some of these very basic tools, and a 21-day rehab, that's how you can do 8 units this year. You want to do 8 units this year. Starting out with that same amount of money, because every time you refinance, you get your capital back and you go do it again. But that's not a mystery. There's nothing strange about that. And if you're keeping the houses, don't forget your income is bumping with each house that you keep.